Equity.Guru Roundtable. Rob Simpson with you. Chris Perry upstairs in the upper section of the chalet. Down below is TK Indicena, poor fellow. And also down there in the basement is Michelle Ventura. Doing things a little different today on the roundtable. Not our usual, neighborhood, if you will. This is a San Diego-based company. It's a NASDAQ. It's up in the, $5-6 range. And it's Bionano Genomics. So this is kind of one of those, just give you an idea and maybe report on it and give you some thoughts on investing on Bionano, which means what, Michelle?
So as Rob said, very different because they are a large company, a $1.6 billion market cap. You can see here, welcome to Cytopia. You're going to hear a lot of cyto because this company is all about cytogenetics and cytogenomics. And it's all about genome mapping. And if anyone's interested for a deeper dive, I highly recommend you guys to check out Kieran Robertson's work on Equity.Guru. He's been following this company and is very bullish, one of his favorite picks for the long term. And he says, he's not a science freak. He doesn't really understand the larger technology, but he sees the value in the technology that they have, which is basically reading and dissecting chromosomes, cytogenetics, right? Basically what laboratories do nowadays is they'll break down your chromosomes to look for abnormalities. You can use that to basically detect cancer and other diseases. Very slow, very expensive, and speed is of the essence, right? So what Bionano has is they have their technology here, the Sapphire system, which can basically break down these chromosomes, actually map out the entire human genome in less than 6 hours, and is cheaper and can detect these abnormalities where traditional tests cannot. So this is one of those disruption plays in the biotech space.
So you're telling me that in 6 hours, they can tell me everything that's going on in my bod.
Exactly. That's what they claim to say.
Wow. Reaction to this, TK, on an analytical level?
So this is kind of one of those situations. I've written about this in the past, about the pharmaceutical companies in Canada compared to the US. Well, this one is a life sciences company, but we'll just call it science, both sides. They're in the US, obviously there's more buying power, which can push valuations up to 1.6 billion. But this is a selfless plug of Medexus one more time. But Medexus is a pharmaceutical company here in Canada. And it has those brands, Xfinity, without the F, as Rob said in the last one. And 2015, it made $3 million in sales. And it has a market cap, I might be wrong, but it's in the millions, somewhere in the millions.
It was about 30
something million dollars in market cap. It has $79 million in sales in 2021. And compared to Bionano, which has $6 million in sales in 2016 and $8 million in sales in 2020 and has a market cap of close to 1.6 billion.
Yeah.
The disparity between the two valuations, of course, they're different industries, but you can't ignore such a mispricing. It's pretty large. And I think it goes to institutional buying this side. Not this side, but in the US. And that's what I noticed most of from looking at this company. There's nothing that stood out to me except maybe the $300 million in cash that they raised recently, which is 20% of their market cap.
Yeah.
And the institutions are big buyers. So if you look at their full list, because they're in the NASDAQ, you see BlackRock there and Morgan Stanley, you see investment trust, etc. So it's not really retail buying, it's institutional buying that's keeping the stock at this level, which is what people are trying to get in Canada with some of the pharmaceuticals and other life science companies. But the trend is not the same because of a misunderstanding of the technology and the science behind it. And also the buying power is going to other things like the psychedelic space. some empty shell psychedelics and stuff like that. So yeah, it's an interesting dynamic. I think the dichotomy between the two is just Medexus, $79 million in sales, $30 million market cap. Bionano, $8 million in sales, $1.6 billion market cap.
This is a very interesting contrast. Chris Perry, what do you, what's rolling around in there?
There's a lot. Like, this is not one of those companies where realistically their investor deck is, as TK said, aimed at institutions. You got to do a lot of reading and understanding and comprehending and even researching to get to the bottom of what these guys even do, if you're not already in the medical field or in the research field. What it comes down to, and where it separates a bit from Medexus, is the potential for this technology to roll into pretty much every aspect of clinical diagnosis. They're currently dealing with or are helping advance research with groups like UCLA, the Mayo Clinic, Penn State, Duke, Massachusetts General, Emory University. Like, these are big name research groups that if they're using the technology that this company has created and has under license, that's a big deal. If I look at the news flow for Bionano, it's all Bionano Genomics appearing at this conference, appearing at that conference, appearing at this conference. There's a lot of we're presenting here, we're presenting there, and that tells me they're still in the phase of expensive marketing and sales business development. The fact that they have $300 million sitting in the bank is great. And that means that if they spot an opportunity to buy access to the market, they're going to do it. They've already done it a couple of times. They're not at risk of going under at that amount of cash in the bank. So the only risk here is that people don't buy the stock. Well, if you look at the stock chart, people aren't buying the stock, right? It's sitting there with very low volume and not dropping necessarily, right? So if a stock goes 6 months with no volume and no downward movement, that tells me that the institutions that own this stock are quite happy to sit on it, because they believe that one day, in the truest of biotech sector confluence of events, one morning there'll be a deal announced that will pop this thing to a much bigger valuation. The valuation currently, it's problematic. Like, it's difficult to justify unless you're factoring in future growth and future profits, which, I tend to not do for most of my investments. I want them to be actually showing me runs on the board. But the other side of that is the institutions are in the know, right? When these guys are presenting to $1 billion hedge fund, they're doing, again, better due diligence than I can do. And I do better due diligence than half the people watching this. So, if everyone involved in this thing is just sitting patiently and not worried about the opportunity cost of leaving their money in a company that is static and not presenting them any sort of return in the current sense, you always want to know what the insiders are thinking. What they're thinking is, shh, just wait.
Right.
I think just to elaborate on a point here too, I just saw here on their PowerPoint, they believe that their market opportunity is actually $2.6 to $3.8 billion in sales just for selling 10,000 of their Saphir systems. And they just showed this, flow chart, which we talked about. This is a traditional way of how to diagnose and work with cytogenetics and chromosomes versus their way of very simple and, as we talked about, right? In less than 6 hours, or in 6 hours, you map the entire human genome there. So
let's factor into that, though, that if they're looking to sell 10,000 of these things,
yep.
Last quarter they sold 13.
13.
Quarter before they sold 7. Now, yes, that's a good growth, but you got to have a lot of quarters of that kind of growth to get near 10,000 out in the field. So that 300 million, I'm betting that they're going to spend a lot of money on marketing, a lot of money on sales development, and so that could be, quite a ways away before the revenues justify the market cap. So what justifies that market cap? Potential for an exit.
Yeah, probably.
Right. This technology in their hands is going to grow slowly. In the hands of a medical equipment supplier that already has contracts with 1,000 hospitals, suddenly it blows up. So I'd expect to see either a sales partnership or a licensing or a takeout at some point in the next 6 months.
True. The enthusiasm doesn't end with the institutions and probably the corporate team themselves, the operators. It also extends to the analysts. I want to throw some more numbers at you guys here. I love these guys and their models. But in 2021, they're expecting the sales to double to 16 million. So that's going from, like Chris said, 8 this year to selling, was it 8 or 5, something like that, 10 next year. And then in 2022, they're expecting to have $27 million in sales. Again, I don't know. It's a high cost product at the beginning to sell to big buyers, which is not always the greatest competitive advantage, because once you've sold, the only thing you can do is probably consulting on how to use the equipment, but you've simplified the process where you might not get those extra fees. With something that's traditional in their industry, the volume is greater than the purchase price of each individual item. So they have economies of scale just based off that. Yeah. But because the product itself at such a high price point, it's very difficult to justify a margin for it. So I think most of these expectations are just them doubling the sales initiative and marketing, like Chris is saying.
Like anytime you see a company go on about that they're projecting that it's going to be a $2 billion market, well, that's great, but it isn't. And I'm projecting, as always, that Charlize Theron any second now will knock on my door and slide a hotel room key across the table, but she's probably not. It's projections are when I see a slide deck that talks about projections and how much we're going to have in 3 years, like, oh, blow me a fucking kiss, man. Like, move to the next slide. I want to know what you're actually doing. So in actual fact, you've gone from 7 sold to 13 sold. Thumbs up. But I don't want necessarily to be relying on the fact that you're going to sell 20 next quarter and 25 the quarter after that on your way to 10,000. What is your strategy to getting to 10,000 next month? Right? That's where I can justify that market cap. You will eventually have a business that brings in billions. So now your market cap is worth billions. That's a stretch for me. But that said, I don't think that those institutions are in there for what's going to happen in 10 years' time. I think they're in there because they suspect that this technology, now that it's been proven, now that it's actually being used, that someone's going to see that there's a big target on it and say, I want it, and $1 billion as a much larger company can make that worth $1 billion. As it stands, if these guys are commercializing from here on in, it's not worth it. You're already valued at the end point. But if there's a bigger deal coming, or if there's a use of this that is about to pop, then you're looking at something where, throw in some cash that you can afford not to get anything back for 6 to 10 months and see if you can ride that roller coaster.
Oh, dude, I believe Kathy Wood actually owns some Bionano, so that could be.
We're holding our money. We're holding our money.
There it goes.
I noticed that they have the CFO from Tesla, which tells me how they got $300 million, but also makes me worry.
Oh, there's the story. Then it's another gamble.
I think we're sitting pretty. By the way, Charlize might be in town on a shoot, Chris, so you never know, bud.
She's always in town on a shoot. She's just biding her time.
I guess we're standing pat on Bionano right now, folks. You can do what you want to do, but you might want to spend, buy a 60-cent stock that TK's been referencing, as opposed to $6 on Bionano.
MDP.
Yep. All right. Bionano is BNGO, and BNGO is its name-o. It is.
I was waiting for that. Someone was going to sign it.
I know it had to happen. It's NASDAQ, but anyway, we're helping you out. It's always nice to compare and contrast here on the Equity.Guru Roundtable. You're responsible, folks, for your own investment decisions, so do your own research. We didn't really tell you to do a whole lot this time around anyway, so I think we're safe. But good luck out there. For Chris over there and Vishal and Mr. TK downstairs there, we'll see you next time. Rob Simpson, and for all of Equity.Guru, thanks for joining us on the Investor Roundtable. Cheers.